Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Last week, so much had happened during the week to and with the FANGs that I felt that I could not let things go without bringing our viewers up to date, even if I could not let you all know in advance. This is one advantage of being a client of ours, of course. You know what to look for as you have access to our SVA charts every day, so you can follow things closely when change is in the air. I would like to state up front this week that when changes are coming fast and furious as they are now, and as I expect they will be the case for some time to come, joining our investment community will keep you up to date with all of your portfolio holdings and keep you well informed. Just go to www.strategicanalysis.ca/pricing and get started today. I should also observe that part of being fully up to date is also being fully up to date as far as the market is concerned. The stock market, meaning the NASDAQ 100 and the S&P 500, have some way to go on the downside. If history is a good guide, and allow me to say that it is, knowing where and when to step out and then back in again can mean a huge difference to your portfolio and your wealth. Before we take a close look at those FANGs and what's going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with Amazon, and one of the reasons that we had that sort of extra FANG Friday last week unscheduled was because we saw Amazon clearly breaking down below its HB1. That's 9.5 times book value. And that has simply carried on this week. At the time I warned you, we're heading back at least to the bubble price, but it's got to hold there. If it doesn't, then we're in an entirely different ballgame. Alphabet, same story. I had a little rebound, part way down, out of that sort of rectangle there, but it's broken below there this week. Yes, it's going down to its low super growth price, which is 4.5 times book value, and that's only $96. So that's a mere 4%. But let's put things in perspective. Okay, here is the 10-year view of Alphabet, and you can see what's happening with Alphabet. It's only coming back into that long-term valuation range. I actually fully expect, given especially that the fair market value is now turning down again as we expected, I expect we're going to be seeing the super growth price coming up again. That's 3.5 times book value, and that's $75. It's a long way from here. Meta, same story. It too was in a bit of a triangle here, but that's broken down below there. Where the stock goes, by the way, from here, I have less confidence because you see we don't have much history. Here was Facebook, Meta, when it went public, and it went public at about 2.5 times book value, what we call its mid-growth price. But that's now in the cards for sure, $125. But typically, when a stock breaks its super growth price, it is not a good sign. It is a signal that it's going to drop at least one major breakpoint, which means that the downside target is the growth price, or $100. Apple, again, I've said a number of times before, give me the next balance sheet and then we can talk about it a little bit more. Microsoft came right down to its HB1. That's 9.5 times book value. And remember, I had been talking about this for a long time and said, hey, that's where it's going to go for sure. It went just a little tiny little bit below there and it sort of bounced back on side. We're going to have to see if the stock can hold here. I showed you before when it hit its HB2 on the downside that it had a couple of nice tradable bounces. We're going to see if it's possible this time around. Tesla remains in that nice sideways trend between its HB5 and its HB4. That's 26 times book and 20 times book on the bottom. As long as it's there, I really can't say much about the stock. I suppose if you were a holder, I'd hang in there. Given the fair market value being where it is, 70% lower than the current price, frankly, I would be quite concerned in this kind of a market. But we'll have to see what happens at the HB4. NVIDIA has come down, and look at what's happening to the fair market value. I have to say that the semiconductor stocks are just acting terribly. NVIDIA did break a little bit below its HB2 price. That's 12 times book value. I am on record as having say it's going to go at least to its bubble price, which is considerably below where it is right now. But we'll have to see. The very, very long-term outlook for NVIDIA, however, could be much worse than that. But that's going to be a story for another day. Finally, Netflix. What a sweet stock. Hey, here's the stock. I remember when the stock was way, way, way up at its HB3, I said, look, if you look at the long-term history, it has bottomed previously, and every time at its super growth price, that's 3.5 times book value. Well, didn't quite get there because I think a lot of other people were anticipating that too. However, the stock's had a nice bounce, broke out over its low super growth price, that's 4.5 times book, pulled back, and has been moving sideways. And look what's happened, okay, in the past week or so. Against all that market weakness, the stock has actually gone from strength to strength. I kind of like this one right now, and I'd hang in there. In summary, my summary is going to be short this week, and if not sweet, I hope that it will at least be helpful. First of all three of the market indices, the NASDAQ 100, the Standard & Poor's 500, and the Standard & Poor's TSX, have all abandoned any pretext of hanging in at their recent key and critical valuation levels. The next step down is here and upon us, and it will be big. Those who are hoping that it's almost all over but the shouting are dreaming, if, as I said, history is any guide. 5 of the FANGs are now looking to be heading lower. 2 more are question marks, that is Tesla and Netflix, but so far so good. The 8th, Apple, is an unknown until we get a new balance sheet. Personally, I don't like mysteries in my own investments. Things are hard enough to parse without having to outright guess as well. Now, the FANGs, which I said a number of times were trading in a manner which I termed sloppy, Alphabet and Meta, have delivered a clear message now. Alphabet and Meta are heading lower. Last week, Amazon broke its HB1 support, that's 9.5 times book, and this week solidly confirmed the action. You should look for the bubble price, that's 7.4 times book, to come up. That's about $15 or 14% from here. That, however, may be just the start. Microsoft came right down to my HB1 target, that's 9.5 times book, as I had been forecasting for at least 4 weeks when it was trading some 28% higher. That's one break point. The shares had a little look-see just in the south side before recovering. Okay, so keep a very close eye here. I don't trust anybody in this market. NVIDIA broke its HB2 support level yesterday, and while it may need a few days for a solid confirmation, personally, I wouldn't wait to exit if I held it. You all know that the industry appears to be in disarray, and I fully expect that this break is a harbinger of lower and perhaps much lower prices. Intel was already showing the way for NVIDIA shareholders, as I showed you recently, and I would pay full attention. That leaves two stocks, Tesla and Netflix, which have not given sell signals. I would say yet, but that would be presumptuous. I try not to tell the market or individual stocks what to do, although sometimes it's very tempting. Tesla is trading in a sideways band bounded by its HB5 on the top. That's 26 times book, and its HB4 on the bottom, or 20 times book. Which way will it break? Frankly, I fear the worst, but I would not go to the mat to defend my viewpoint right now. It is Netflix that remains my personal pet stock right now. Its super growth price, 3.5 times book, was a very long-term low, and Netflix has moved up and away from there, even going as far as to rise, even as the rest of the FANGs were falling. I would hang on to it for now. So, lots to think about this week. As we've seen over the past 3.5 years with our FANG Friday telecasts, these behemoths have provided many opportunities to trade, both on the long and the short side, and nothing has changed this week. There's always more to do. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you